Based on the provided data, the trend for Bitcoin appears to be sideways, with a slight bearish bias. The historical data shows fluctuations around the support and resistance levels, with the price closing slightly below the resistance level on the last day of the historical period. The forecast data suggests a continuation of this sideways trend with a slight downward movement. Considering these observations, a conservative strategy could be implemented. A long position could be considered if the price breaks above the resistance level of $104,700. The entry price would be set at $104,700, with a stop-loss order placed at $95,600, the support level, and a target price set at $107,100, the highest point of the Bollinger Bands during the historical period. This strategy leverages the potential upward movement while mitigating risk by setting a stop-loss order below the support level. Based on the provided data, Bitcoin Cash appears to be in a short-term downtrend. The historical price data shows a consistent decline over the past 2 weeks, and the forecast data suggests this trend may continue. The support price at $313 indicates a potential floor for the price, but the resistance at $421 remains distant. Therefore, a bearish strategy is recommended. Enter a short position at the market price near $320. Set a stop-loss order at $315 to limit potential losses. The target price for this trade is $305 based on the forecast data and the downward trend. This strategy utilizes the support level as a stop-loss and the forecast price as a target, aiming to capitalize on the expected price decline. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a consistent decline, with the price closing below the previous day's close in many instances. The forecast data further reinforces this bearish outlook, predicting a continued decline in price over the next week. The RSI indicator also supports this view, hovering in the oversold region for much of the period. Therefore, a suitable strategy would be to short Stacks. Enter a short position at the market price, with a stop-loss order placed at $0.949, the resistance level, and a target price of $0.836, the lowest predicted price in the forecast data. This strategy leverages the downtrend and the oversold RSI, aiming to profit from a further decline in the price of Stacks. Based on the provided data, Ethereum appears to be in an upward trend. The historical price data shows a general increase over the 2-week period, with support consistently near $2,660 and resistance around $3,070. The forecast data suggests this upward trend is likely to continue. Therefore, a long position is recommended. A suitable entry price would be around $2,700, with a stop-loss order placed at $2,660 to limit potential losses. The target price could be set at $2,820, aiming for a potential profit of approximately 4.5%. Additionally, the RSI indicator suggests that the market is not overbought, and the Bollinger Bands indicate that the price is trading within the upper band, suggesting potential for further upside. Combining these signals with the historical trend, a long position with the aforementioned entry, stop-loss, and target prices appears to be a promising strategy. This strategy prioritizes risk management by setting a clear stop-loss and aims for a reasonable profit target. Based on the provided historical and forecast data, XRP appears to be in a slight downtrend. The price has been fluctuating around the support level of $2.56, with a recent dip towards the lower end of the Bollinger Bands. The RSI is currently hovering around $46, indicating neutral conditions. Given these observations, a potential long position strategy could be initiated. Enter a long position at the support level of $2.56 with a stop-loss order placed at $2.52 to limit potential losses. The target price for this trade could be set at $2.75, aiming for a potential profit of approximately 7%. This strategy combines the support level with a risk-reward ratio that aligns with the overall market sentiment. Based on the provided data, Binance Coin appears to be in a sideways trend with a slight upward bias. The historical data shows price fluctuations within a range, with support around $645 and resistance at $680. The forecast data suggests a continuation of this trend, with prices hovering around the $660 level. Considering the RSI, which currently sits at $51.40, we can identify a potential entry point around $655, with a stop loss at $645 to mitigate risk. The target price could be set at $675, aiming for a profit of approximately 3%. The Bollinger Bands indicate a potential for further upward movement as the price is currently trading near the lower band. This reinforces the bullish outlook and supports the chosen entry point and target price. Based on the provided data, Stellar appears to be in a sideways trend with a slight upward bias. The historical price data shows a range between the support level of $0.323 and the resistance level of $0.352. The forecast data suggests a potential consolidation phase in the coming week, with prices fluctuating around the 32 cents mark. Considering these factors, a strategy based on the RSI indicator with an oversold level of $20 and an overbought level of $80 could be employed. A buy entry signal could be triggered when the RSI dips below $20, with a stop loss placed below the recent swing low. The target price could be set at the resistance level of $0.352. Additionally, a sell signal could be generated when the RSI surpasses $80, with a stop loss placed above the recent swing high. The target price for a sell position could be set at the support level of $0.323. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, with support holding around $3.71. The forecast prices also indicate a downward trajectory. Considering the trend, a short position could be initiated. A suitable entry price would be around $3.74, with a stop loss set at $3.78 to limit potential losses. The target price could be set at $3.54, aligning with the recent low and the forecast price for the week. Additionally, the RSI indicator suggests the asset is oversold, further supporting a short position. The Bollinger Bands show the price trading close to the lower band, suggesting potential for further downward movement. Based on the provided data, Cardano appears to be in a sideways trend with slight upward momentum. The historical price action shows fluctuations around the support and resistance levels of $0.753 and $0.772, respectively. The forecast data suggests a slight downward trend in the coming week, potentially finding support around the 75 cents level. Considering the RSI, a buy signal could be generated if the RSI rises above $45 and breaks above the overbought level of $80. A sell signal would be triggered if the RSI falls below $40 and breaks below the oversold level of $20. Using Bollinger Bands, we can identify potential entry points when the price touches the lower band, suggesting a potential bounce. A stop-loss order should be placed below the recent swing low, and the target price could be set at the upper band or a previous resistance level. Based on the provided data, Litecoin appears to be in an overall uptrend. The historical price data shows a consistent upward movement, and the forecast data suggests this trend will continue. The support level of $101 provides a strong base for the price, while the resistance level of $135 may act as a temporary ceiling. Considering the RSI, the current value is $56.80, indicating that Litecoin is not overbought or oversold. Using the RSI strategy with oversold at $20 and overbought at $80, we would wait for a pullback towards the $20 level before entering a long position. The Bollinger Bands suggest a potential breakout above the resistance level of $135 in the near future. Therefore, a suitable entry price would be around $128, with a stop-loss order placed at $122 and a target price set at $140. This strategy aims to capitalize on the ongoing uptrend while managing risk effectively. Based on the provided data, Coin appears to be in a sideways trend with a slight upward bias. The historical data shows price fluctuations within a range bounded by the support and resistance levels. The forecast data suggests a continuation of this trend with a slight increase in price. Considering these factors, a potential strategy could involve entering a long position around the support level of $3.06. The stop loss could be placed at $3 to limit potential losses. The target price could be set at $3.78, which represents the recent high point and aligns with the upward bias. This strategy utilizes the support level as a buying opportunity and aims to capitalize on the potential price increase. Based on the provided historical and forecast data, Aptos appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support price of $5.81 provides a potential buying opportunity. We recommend entering a long position at the support level of $5.81. A stop-loss order should be placed at $5.75 to limit potential losses. The initial target price is set at $6.25, representing a 7% gain. The RSI indicator currently sits at $34, indicating that the asset is oversold. Historically, when the RSI falls below $30, Aptos has shown a tendency to rebound. Additionally, the price is approaching the lower band of the Bollinger Bands, which could signal a potential bounce. Combining these technical indicators with the downtrend analysis, we believe a long position at the support level with a defined stop-loss and target price presents a favorable risk-reward opportunity. Based on the provided historical and forecast data for SE, a potential bullish strategy can be implemented. The trend indicates an upward movement with support at $0.221 and resistance at $0.425. The forecast prices for the upcoming week suggest continued growth, with values ranging from $0.253 to 28 cents. Considering these factors, a long position can be initiated at the entry price of $0.253 on February 24. The stop-loss order should be placed at $0.221 to minimize potential losses. The target price can be set at 28 cents, aiming for a profit of approximately $10%. This strategy incorporates the positive trend, forecast price projections, and support levels to maximize potential returns while managing risk. Based on the provided data, Ethereum Classic appears to be in a sideways trend with a slight upward bias. The price fluctuates within the support and resistance levels of $20.20 and $21.20, respectively. Looking at the forecast data, the price is expected to remain within this range, with a slight downward movement in the coming week. Considering the RSI indicator, the current value of $43.60 suggests the asset is not overbought or oversold. However, a potential entry opportunity could arise if the RSI dips below $35, indicating a possible oversold condition. In this scenario, a long position could be initiated with a stop-loss order placed below the recent support level of $20.20. The target price could be set at the resistance level of $21.20. Additionally, the Bollinger Bands suggest a potential upward movement if the price breaks above the upper band. However, this strategy carries higher risk due to the volatility associated with breaking out of the bands. Based on the provided historical and forecast data, Polygon appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The RSI indicator also supports this bearish outlook, with values consistently below $50, indicating a lack of buying pressure. Therefore, a short position could be considered. A potential entry price would be around $0.297, the recent low. The stop-loss could be placed at $0.302, slightly above the entry price, to limit potential losses. The target price could be set at $0.276, the predicted low for next week. This strategy capitalizes on the anticipated downtrend and aims to profit from the price decline. Remember, trading cryptocurrencies involves significant risk, and this is just a suggested strategy. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicator is hovering in the oversold region, indicating potential for a short-term rebound. However, the overall downward momentum suggests that any rally will likely be short-lived. Therefore, a short position is recommended. A suitable entry price would be around 16 cents dollars, with a stop-loss order placed at $0.165 to limit potential losses. The target price should be set at $0.145, aligning with the forecast price and the downward trend. This strategy leverages the potential for a short-term rebound while capitalizing on the overall downtrend. The RSI oversold level adds confirmation to the potential for a short-term price increase before continuing the downward movement. The Bollinger Bands also support this strategy as the price is trading near the lower band, suggesting a potential bounce before further decline. Based on the provided historical and forecast data, optimism appears to be in a sideways trend with a slight upward bias. The support level of $1.01 provides a strong base, while the resistance at $1.69 caps potential gains. Considering the RSI, which suggests the asset is currently in a neutral zone, we can initiate a long position when the price breaks above the resistance level of $1.69. The entry price for this long position should be set at $1.70, with a stop-loss order placed at $1.01 to mitigate potential losses. The target price for this trade is set at $1.85, aiming for a potential profit of 9%. The Bollinger Band strategy suggests entering a long position when the price moves above the upper band, indicating potential upward momentum. However, given the sideways trend and the recent price action, waiting for a clear break above the resistance level before entering a long position seems more prudent. Therefore, the Bollinger Band strategy will be used as a confirmation signal alongside the RSI breakout strategy. If the price breaks above $1.69 and subsequently touches the upper Bollinger Band, it would further strengthen the bullish outlook and justify holding the long position. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below its support level of $0.221 in the last week. The forecast data also predicts further price declines in the coming week. Considering these factors, a short selling strategy is recommended. A suitable entry point would be around $0.235, with a stop-loss order placed at $0.246, the recent resistance level. The target price could be set at $0.217, the lowest forecast price for the coming week. In addition to the trend analysis, the RSI indicator suggests potential oversold conditions. The RSI has been hovering below $35 for several days, indicating potential buying pressure. However, given the overall downtrend and the forecast price decline, a short position could be more profitable. The Bollinger Bands also support the short position. The price has been trading below the middle band for several days, and the bands are narrowing, suggesting a potential breakout to the downside. Based on the historical and forecast data, Solana appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue. The support level at $168 is acting as a temporary floor, but the resistance at $176 is proving too strong to break. Given this, a short position could be considered. A good entry point would be around $170, with a stop-loss order placed at $176 to limit potential losses. The target price could be set at $161, based on the forecast data. Additionally, the RSI is currently in oversold territory, suggesting potential for further downside. The Bollinger Bands are also indicating a potential for further price decline as the price is trading close to the lower band. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a general downward movement, and the forecast data predicts further decline. The RSI indicator also supports this view, as it is currently hovering below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential breakout in either direction, but the overall trend favors a downward movement. Therefore, a bearish strategy is recommended. Enter a short position at the market price, approximately $0.787 USD, with a stop-loss order placed at $0.805 USD, the first forecast price. The target price is set at $0.718 USD, the identified support level. This strategy leverages the downtrend and the potential for a price drop below the support level. Based on the provided data, render appears to be in a downtrend. The historical prices show a general decline, and the forecast prices continue this downward trajectory. Support and resistance levels further indicate a bearish sentiment, with the price consistently finding resistance around $4.64 and support near $4.14. Considering these factors, a bearish strategy is recommended. Enter a short position when the price touches the resistance level of $4.14. Set a stop-loss order at $4.27 to limit potential losses. The initial target price for this trade is $3.87, aligning with the forecast price for February 25. This strategy leverages the downtrend identified in the historical and forecast data, and the RSI indicator, which is currently hovering around $35, suggests that the asset is not oversold and could potentially continue its downward movement. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, with the price closing below the previous day's close on several occasions. The forecast data further supports this bearish outlook, predicting a continued decline in price over the next week. The RSI indicator, currently hovering around $35, suggests that the asset is not oversold, but it is also not showing any signs of strong bullish momentum. The Bollinger Bands are contracting, indicating a potential period of consolidation or a possible breakout in either direction. Given this analysis, a cautious short position could be considered. A potential entry price would be around $0.139, the recent low point. The stop-loss order should be placed above the recent high, around $0.149, to limit potential losses. The target price could be set at $0.123, the predicted low point for the week according to the forecast data. This strategy aims to capitalize on the downtrend while managing risk through a well-defined stop-loss order. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data which predicts further price drops in the coming week. The RSI indicator suggests that the asset is oversold, with readings consistently below $40. This, coupled with the price action, indicates a potential for a short-term bounce. However, the overall trend remains bearish. Therefore, a short position is recommended. Enter a short position at $0.247, the current resistance level. Set a stop-loss order at $0.258, slightly above the recent highs. The target price is 22 cents, based on the forecast data and the downtrend. Monitor the RSI closely for potential overbought signals, as this could indicate a temporary reversal. The Bollinger Bands suggest a widening range, which could lead to increased volatility. Manage your risk accordingly and consider scaling out of the position as the target price is approached. Based on the provided data, PEPE appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations around the support price of $0.000000910, with occasional dips below this level. The forecast data suggests a continuation of this sideways trend with a slight downward movement. Considering these factors, a potential entry point could be around $0.000000930, near the recent lows. A stop-loss order should be placed below the support level at $0.000000910 to limit potential losses. The target price could be set at $0.000001010, aiming for a breakout above the recent resistance level. The RSI indicator currently sits around $39, indicating that the asset is not oversold or overbought. However, a bullish signal could be generated if the RSI crosses above $45. Bollinger Bands suggest a narrowing range, indicating a potential for a breakout in either direction. Given the sideways trend and the potential for a breakout, a combination of these strategies could be employed. Based on the provided historical and forecast data for Shiba Inu, a potential bullish strategy emerges. The price has been consolidating around the support level of $0.00000150, with a slight upward trend in recent days. The forecast suggests a continued upward movement, with prices potentially reaching $0.00000150 in the coming week. Considering these factors, a long position could be initiated at the current market price of $0.00000150. A stop-loss order should be placed at $0.00000146 to limit potential losses. The target price for this trade could be set at $0.00000160, representing a potential gain of 6.67%. This strategy leverages the potential for price appreciation while managing risk through a well-defined stop-loss order. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further downward movement. The support and resistance levels also indicate a bearish bias, with the resistance level consistently higher than the support level. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.647, the recent support level. The target price should be set at $0.558, the lowest forecast price. This strategy utilizes the bearish trend, support and resistance levels, and the forecast data to potentially generate profits from the expected price decline. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding around $0.00255. The forecast data suggests this downtrend is likely to continue, with prices potentially falling to $0.00277 or lower. Given this outlook, a short position could be considered. A suitable entry price would be around $0.00295, near the current resistance level. The stop-loss order should be placed above the recent high of $0.0031 to limit potential losses. The target price could be set at $0.00255, the identified support level, which represents a potential profit of approximately 13%. This strategy utilizes the downtrend and support level as key indicators for entry and target. Based on the provided data, Near Protocol appears to be in a sideways trend with minor fluctuations. The historical price data shows a range between $3.14 and $4.91. The forecast data suggests a slight downward movement in the coming week, hovering around $3.20. Considering the RSI, the asset is currently in a neutral zone, neither overbought nor oversold. The Bollinger Bands indicate a narrowing price range, suggesting a potential breakout in either direction. Therefore, a conservative strategy would be to wait for a clear breakout signal. A buy entry could be triggered if the price breaks above the resistance level of $4.91 with strong volume confirmation. The stop loss could be placed below the recent swing low around $3.14. The target price could be set at the next resistance level, which could be around $5.54 based on the historical data. Alternatively, a sell entry could be considered if the price breaks below the support level of $3.14 with strong volume confirmation. The stop loss could be placed above the recent swing high around $4.91, and the target price could be set at the next support level, which could be around $2.63. Based on the provided historical and forecast data, Internet Computer appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. Support and resistance levels indicate a potential bounce around the $6.76 support level, but the overall direction remains bearish. Therefore, a short position strategy is recommended. Enter a short position at the market price around $6.90. Set a stop-loss order at $7.05 to limit potential losses. The target price is $6.65, representing a potential profit of approximately 4%. This strategy leverages the identified downtrend and utilizes support and resistance levels to define entry and stop-loss points. Based on the provided historical and forecast data, Injective appears to be in an upward trend. The price has been steadily increasing over the past 2 weeks, with a slight dip last week. The forecast data suggests this upward trend will continue. Support and resistance levels also indicate a bullish outlook. The support price of $13.20 has been holding strong, while the resistance price of $20.20 has yet to be broken. Considering these factors, a potential strategy could involve a long position entry at the current price of $15.30. A stop-loss order could be placed at $13.20 to mitigate potential losses. The target price could be set at $17.10 based on the resistance level and the forecast data. Alternatively, a strategy based on RSI could be employed, with a buy signal generated when RSI dips below $30 and a sell signal generated when RSI crosses above $70. Finally, the Bollinger Bands can be used to identify potential entry and exit points, with a buy signal generated when the price crosses above the upper band and a sell signal generated when the price crosses below the lower band. The most efficient strategy would likely be a combination of these approaches, taking advantage of multiple technical indicators to confirm the direction of the trend and identify optimal entry and exit points. Based on the provided data, BTC appears to be in an overall uptrend. The historical data shows a consistent upward movement, with the price consistently bouncing back from the support level of $360. The forecast data also suggests continued growth. To capitalize on this trend, a long position could be initiated. A suitable entry price would be around $418, the first forecast price, with a stop-loss set at $360, the strong support level. The target price could be set at $468, the recent resistance level, aiming for a potential upside of approximately 12%. In addition to the trend-based strategy, we can incorporate RSI and Bollinger Bands for further confirmation. RSI is currently around $55, suggesting the asset is not overbought. As RSI is expected to rise further with the anticipated price increase, a long position would be consistent with this indicator. Additionally, BTC is currently trading within the upper Bollinger Band, indicating potential for further upside. However, if the price breaks below the lower Bollinger Band, it would signal a potential reversal and necessitate closing the position. By combining these strategies, a well-rounded and potentially profitable investment approach can be developed. Based on the provided historical and forecast data for THETA network, a potential investment strategy emerges. The price has been fluctuating within a range, with a support level around $1.26 and resistance at $1.35. The forecast suggests a potential decline in price over the next week. Therefore, a bearish strategy could be considered. We could enter a short position at the market price around $1.31, with a stop-loss order placed at $1.35 to limit potential losses. The target price could be set at $1.26, aligning with the support level. Additionally, we can incorporate RSI and Bollinger Bands into the strategy. The RSI has been hovering around $35 to $40, indicating a potential for further downward movement. Furthermore, the price has recently been trading near the upper Bollinger Band, suggesting a potential for a pullback towards the lower band. Combining these signals with the bearish trend identified from the price action, a short position around $1.31 with a stop-loss at $1.35 and a target at $1.26 appears to be a promising strategy. Remember to manage your risk and adjust the strategy based on market conditions. Based on the provided historical and forecast data, WorldCoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast predicting further downward movement. Considering this trend, a bearish strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $1.21. Set a stop-loss order at $1.25 to limit potential losses. The target price should be set at $1.10 based on the forecast and the downtrend. In addition to the trend analysis, the RSI indicator suggests potential overselling in the near future. When the RSI falls below $20, indicating an oversold condition, consider entering a short position with a stop-loss order at $1.25 and a target price of $1.10. The Bollinger Bands also support a bearish outlook, as the price has been trading below the middle band and is approaching the lower band. This suggests a potential for further downward movement. Combining these three strategies, a short position with a stop-loss at $1.25 and a target price of $1.10 appears to be the most efficient approach. Based on the provided data, Hooked Protocol appears to be in a sideways trend with a slight upward bias. The historical price data shows fluctuations within a range, with support around $0.198 and resistance at 28 cents. The RSI indicates that the asset is not currently overbought or oversold, hovering around the neutral level. The Bollinger Bands suggest a narrowing range, indicating potential for a breakout in either direction. A conservative strategy could involve waiting for a breakout above the resistance level of 28 cents. A buy order could be placed at $0.285 with a stop-loss set at $0.275 to limit potential losses. The initial target price could be set at 32 cents, based on the historical price action. Alternatively, a shorter-term strategy could be employed by identifying oversold conditions on the RSI, such as dipping below $30. A buy order could be placed at the bottom of the RSI dip with a stop-loss set at the recent swing low. The target price could be set at the previous resistance level or a key Fibonacci retracement level. Remember to adjust these parameters based on your risk tolerance and market conditions. Based on the provided data, Artificial Superintelligence Alliance appears to be in a sideways trend with a slight bearish bias. The price action oscillates between the support level of $0.721 and the resistance level of $0.788. The RSI indicator fluctuates between oversold and overbought levels, suggesting indecision in the market. The Bollinger Bands are relatively narrow, indicating low volatility. A potential long position could be considered if the price breaks above the resistance level of $0.788. A suitable entry price would be $0.790, with a stop-loss order placed at $0.760 to limit potential losses. The target price could be set at $0.820, aiming for a profit of approximately $3.78%. This strategy capitalizes on the potential upside breakout while managing risk effectively. Based on the provided data, Polkadot appears to be in a sideways trend with minor fluctuations. The historical price data shows a range between $4.77 support and $6.17 resistance. The forecast data suggests a slight downward trend over the next week. The RSI indicator hovers around the neutral level, indicating neither overbought nor oversold conditions. Considering these factors, a neutral strategy with a focus on support and resistance levels seems appropriate. Enter a long position at the support level of $4.77. Set a stop-loss order at $4.70 to limit potential losses. Aim for a target price of $5.20, which represents a break above the recent resistance level. This strategy utilizes the support level as a potential entry point and aims for a modest profit target while minimizing risk. Based on the provided data, Filecoin appears to be in a short-term downtrend. The price has been declining over the past 2 weeks, with a forecast indicating further downward movement in the coming week. The RSI is currently around $40, suggesting that the asset is not oversold. However, the price is approaching the support level of $3.23, which could provide a buying opportunity. A potential strategy would be to enter a long position at the support level of $3.23 with a stop-loss order placed at $3.17. The target price could be set at $3.49, the recent resistance level. This strategy utilizes the support level as a potential entry point and aims to capitalize on a potential bounce back towards the resistance level. The stop-loss order helps to limit potential losses if the downtrend continues. Based on the provided data, Conflux shows a potential bullish trend. The historical price data suggests an upward movement, and the forecast data further supports this trend. The RSI indicator hovers around $40, indicating a neutral sentiment but with room for further upward movement. The Bollinger Bands show narrowing price action, suggesting a potential breakout. Therefore, a long position can be considered. The entry price should be around $0.118, with a stop-loss placed at $0.107, the support level. The target price can be set at $0.141, the resistance level. This strategy combines the bullish trend, RSI momentum, and potential breakout from the Bollinger Bands. Remember that this is a suggested strategy and should be further evaluated and adjusted based on your risk tolerance and market conditions. Based on the provided historical and forecast data, Ethereum name service appears to be in a sideways trend with a slight upward bias. The price fluctuates within a defined range, with support around $26.20 and resistance at $30.80. The forecast suggests a continuation of this trend with prices hovering around $26.80 to $27.1 for the next week. Considering these factors, a long position could be initiated around $26.50 with a stop-loss placed at $26 to manage risk. The target price could be set at $28, aiming for a potential $5% to $6% return. This strategy utilizes the support level as a potential entry point and sets a stop-loss below the immediate support to minimize potential losses. The target price is chosen based on the resistance level and the expected upward momentum. Based on the provided data, Avalanche appears to be in a short-term downtrend. The historical price data shows a general decline, with the forecast data suggesting further downward movement. The RSI, while fluctuating, is generally below the $50 level, indicating bearish sentiment. Considering these factors, a short position could be considered. A potential entry price would be around $24.50, with a stop-loss order placed at $25.20 to limit potential losses. The target price could be set at $23.50, aiming for a profit of approximately 4%. This strategy utilizes the downward trend and the RSI to identify a potential entry point. Additionally, the stop-loss order helps manage risk by exiting the position if the price unexpectedly moves against the trade. Based on the provided historical and forecast data, Bitcoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The RSI indicator is currently hovering around $36, suggesting that the asset is not oversold. However, the Bollinger Bands indicate that the price is approaching the lower band, suggesting potential for further downside movement. Therefore, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed above the recent high of $0.0354. The target price should be set at $0.0298, which aligns with the lower Bollinger Band and the forecast price for the coming week. This strategy capitalizes on the downtrend and the potential for further price decline while managing risk with a defined stop-loss. Based on the provided historical and forecast data for PENDLE, the trend appears to be sideways with a slight downward bias. The RSI oscillates around the neutral level of $50, suggesting neither strong bullish nor bearish momentum. The Bollinger Bands are relatively wide, indicating high volatility. A position strategy could be implemented using a combination of RSI and Bollinger Band signals. A buy signal could be generated if the price touches the lower Bollinger Band and the RSI is below $40, indicating oversold conditions. The entry price would be at the lower Bollinger Band, with a stop-loss order placed slightly below the recent swing low. The target price could be set at the upper Bollinger Band or a resistance level identified on the chart. Conversely, a sell signal could be generated if the price touches the upper Bollinger Band and the RSI is above $60, indicating overbought conditions. The entry price would be at the upper Bollinger Band, with a stop-loss order placed slightly above the recent swing high. The target price could be set at the lower Bollinger Band or a support level identified on the chart. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast predicts further price drops. The RSI is currently below $40, indicating oversold conditions, suggesting a potential short-term bounce. However, the overall trend remains bearish. Therefore, a short position could be considered. A suitable entry price would be around $0.356, the recent high. The stop-loss order should be placed above the recent resistance level at $0.368, limiting potential losses. The target price could be set at $0.327, based on the forecast data and the lower Bollinger Band. The Bollinger Band strategy also supports a short position. The price is currently trading below the middle Bollinger Band, and the bands are narrowing, indicating a potential breakout in the direction of the trend. The RSI strategy further reinforces this view, as the oversold conditions suggest a potential bounce before continuing the downtrend. The combined signals from these three strategies suggest a high probability of a continued downward price movement. Based on the provided data, Decentraland appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests further downward movement. The RSI is hovering around the neutral level, indicating a lack of strong momentum in either direction. However, the price is approaching the oversold level, which could signal a potential bounce. Therefore, a short-term bullish position could be considered. A suitable entry price would be around $0.309, the current support level. A stop-loss order should be placed below the support level at $0.305 to limit potential losses. The target price could be set at $0.324, a previous resistance level that has now been broken. This strategy utilizes the oversold condition of the RSI and the potential for a bounce from the support level. Based on the provided historical and forecast data, ENG coin appears to be in a short-term sideways trend. The price has fluctuated within a relatively narrow range over the past 2 weeks. The support level of $0.116 holds strong, while the resistance level of $0.121 has been tested several times but not broken. The RSI indicator suggests the asset is not overbought or oversold, hovering around the neutral level. The Bollinger Bands are also relatively tight, indicating low volatility. Considering these factors, a neutral to slightly bullish strategy might be suitable. A potential entry point could be around $0.118, with a stop-loss order placed below the recent support level at $0.116. The target price could be set at $0.125, aiming for a break above the resistance level. However, due to the sideways trend, it's crucial to manage risk carefully and adjust the position size accordingly. Based on the provided data, Uniswap appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, and the forecast data suggests this trend will continue. The support price of $8.99 is acting as a temporary floor, but the overall direction is downwards. Considering this, a short position could be profitable. We could enter a short position at $9, with a stop-loss order set at $9.15 to limit potential losses. The target price could be set at $8.70, aiming to capitalize on the anticipated price decline. In addition to the trend analysis, we can utilize the RSI and Bollinger Bands to refine our strategy. The RSI is currently hovering around $38, suggesting the asset is not oversold. However, it has been trending downwards, indicating potential for further downside movement. The Bollinger Bands are narrowing, which could signal a potential breakout in either direction. Given the overall downtrend, we would anticipate a break below the lower Bollinger Band, further confirming our short position. Based on the provided data, Chainlink appears to be in a downtrend. The historical price data shows a general decline, and the forecast data predicts further price drops. The support and resistance levels also indicate a bearish sentiment, with the resistance at $18.30 consistently holding strong. Therefore, a bearish strategy is recommended. A suitable entry point for a short position would be around $17.80, the predicted price for February 24th. The stop-loss order should be placed at $18.30, just above the resistance level, to limit potential losses. The target price could be set at $16.70, the predicted price for February 28, capturing a potential profit of around 6%. This strategy incorporates the bearish trend, support and resistance levels, and the forecast data to maximize potential returns while managing risk. Based on the provided data, Aave appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations within a range, with the support price consistently around $242. The forecast data suggests a continued downward movement in the coming week. Considering these factors, a cautious approach is recommended. A potential entry strategy could involve buying around the $242 support level. The stop-loss price should be set at $239 to limit potential losses. The target price could be set at $258, aiming for a potential upside of around 7%. This strategy utilizes the support level as a potential buying opportunity and incorporates risk management measures. Based on the provided data, EOS appears to be in a sideways trend with a slight bearish bias. The price has been fluctuating between the support level of $0.579 and the resistance level of $0.665. The RSI indicator is hovering around the neutral level of $50, suggesting a lack of strong momentum in either direction. The Bollinger Bands are relatively narrow, indicating low volatility. A potential strategy could involve a short position if the price breaks below the support level of $0.579. The entry price would be $0.578, with a stop-loss order placed at $0.582 to limit potential losses. The target price could be set at $0.555, based on the historical price action and the current bearish trend. This strategy is based on the technical analysis of the price action and the RSI indicator. Based on the provided data, Tron appears to be in a sideways trend with a slight bearish bias. While the historical price data shows some volatility, the support level at $0.238 has held strong. The forecast data suggests a slight downward movement in the coming week. Therefore, a conservative strategy could involve waiting for a dip below the support level at $0.238. A buy entry could be triggered at $0.236 with a stop-loss order placed at $0.234 to limit potential losses. The target price could be set at $0.246, aiming to capture the potential upside based on the recent historical highs. This strategy utilizes both the support level and the forecast data to identify a potential buying opportunity. Based on the provided data, Suncoin appears to be in a short-term downtrend. The closing prices have been generally declining over the past 2 weeks, and the forecast data suggests this trend might continue. The RSI indicator is hovering around $45, indicating neutral sentiment, but the price action suggests a potential for further downside. Therefore, a bearish strategy could be considered. A suitable entry point for a short position could be around $0.0188, the recent support level. A stop-loss order should be placed above the recent high at $0.0192 to limit potential losses. The target price could be set at $0.0185, the next support level, aiming for a potential 1% profit. This strategy combines the current trend, support and resistance levels, and a reasonable risk-reward ratio.